Let's get right to it with our floor show. Joining me now, Fitzgerald Group Principal Keith Fitzgerald and Mainstay Capital CEO David Kudla. David, let me start with you. How worried are you about these tariffs, even though right now it's just a threat?
Well, it is a threat right now, but it's a threat that President Trump-elect, President Trump is getting out in front of it. He's actually doing some posturing right now with the 25% tariffs on that are on Canada and Mexico, 10% additional on China. The 25% on Canada and Mexico are about drug cartels and migrants. But also, if you think about it, it's also a way to get at nearshoring. And nearshoring is when China builds plants in the U.S. to be able to import in Mexico to be able to import into the U.S. under the tariff agreement. They basically skirt those tariffs. So it's important because tariffs essentially are a pressure down on growth and a pressure up on inflation. That's the Fed is trying to do the opposite of that, right. Deal with the opposite of that right now. And, you know, if we get another trade war like the last time, what happened with agricultural products, other products, nobody wins in a trade war.
Keith, do you agree with that assessment, the pressure it may have on equity markets because of the pressure it has on growth?
You know, it's hard to do. You got to very carefully pick which companies you're talking about. You got to think about whether they can operate at scale, whether you're talking about selling something once and making billions or selling something once and maybe making a profit. So nearshoring is important, but I think companies like Walmart, for example, are going to find a way right through this. They're going to renegotiate. They've got a lot of supply chain power. So from an investing standpoint, I'm not so concerned about it.
Keith, follow with me on that, because a lot of people look at these markets, we're at record highs, and they're thinking, if I'm not in, how do I get in? What's your answer to that?
Well, the answer is very simple. You know, number one, you got to take a deep breath. But number two, they're not as high as you think they are, particularly if you're focused on where the world's going rather than where the world's been. We run into that a lot, Taylor, and we do this with our clients. Say, pick a point, any point in the last 20 years, pick a great name stock, blindly put your viewer on 20-year chart and tell me that that was expensive 10 years ago, 5 years ago, 6 years ago, 3 years ago, whatever the stock is. Odds are it's not. But the key is you got to have guts not to get scared out of the great companies.
David, what are some of those great sectors, great companies that you're liking right now?
I think when we look at what's going to be happening with our economy, with President Trump coming in, the threat of tariffs and what that means to multinational conglomerates, that's why we're seeing more interest in small and mid-cap stocks. We started increasing our exposure last summer. It makes a lot of sense here going into 2025. We think they'll do very well. There's also some areas outside of, you know, we like technology, generative AI. There's a secular long-term growth story there, long-term runway for those stocks. But there's other areas. Utilities are doing well because of the need for these AI data centers. We're looking at a doubling of our energy infrastructure or energy needed to run these AI data centers. It's just incredible what the demand will be. MLPs, that's the toll. The toll that basically in the pipeline to move energy around the country, those MLPs will tend to do very well as we drill, baby, drill, and get even more activity. And also banks. That's our favorite sector is the financials. They're still undervalued compared to the S&P. And we've got underwriting, credit cards at near record high rates. M&A activity is flourishing. Investment banking, in addition to the yield curve, rather than being inverted, is now slightly steepening. So that'll be helping net interest margin for the banks.
You're speaking music to my ears when we get to talk about the uninverted yield curve. So kudos to you for that. I wanted, Keith, in the last few minutes that we have, you say here that you like CrowdStrike. Talk to me about why.
Absolutely. You know, data security is a multi-trillion-dollar problem. It was a huge mistake for people to sell off because of a kerfuffle. Now, granted, that was a managerial sloppiness on their part, but I think we're going to see perhaps even $1 billion quarter when they report. We've got customers deepening their relationships. We've got a long list of nefarious players trying to do things in our world that pretty, much we need to protect against. So I'm looking at this company thinking it's one for the long haul. I'm perfectly happy to go in and buy more shares at these prices ahead of earnings.
I want to ask both of you a final question. If AI is overhyped, Keith?
No way. It's the largest trend in recorded human history. It's going to fundamentally change the course of our planet.
David?
Yeah, it is not hype. It is going to be transformative for business. It's going to be transformative for our society. It's not overhyped. Might be a little ahead of itself at times, but there's a long runway ahead for these companies and these stocks.
My favorite thing about AI is we get to talk in a lot of adjectives. Some people say it's 8 p.m. and the party goes till 4 a.m. Some people say it's the first inning, it's batting practice, there's long runway. So it gives us lots of chances to talk in superlatives. I want to thank both of you, Keith Fitzgerald and David Kudla. Thank you.